Welcome, Patriot News Hour. Joe and Jason on this Friday. Yes, we've made it through another, well, gosh, like all the others, another crazy week as we've almost, what do you got? 6-7 weeks left in the year of chaos. We've got a new all-time record high on the Dow Jones Industrial Average, 44,000 and changes. Elon Musk, I think now, since Election Day, could be wrong on this, but, I want to be, I will say that it's jealousy. It's jealousy on my part. But I believe since the election now, because Tesla is at a new all-time high. Over $1 trillion now for Tesla. That Elon Musk is just in, like I said, the last, 3 days, he's made, I want to say it's now over $20 billion. What a great investment. Hey, I'm going to spend, I think he spent about $130 million back in Trump, and he's turned it into $20 billion. I mean, you're right. Outside of, I don't even know, but outside of maybe 20 people, that's more money than everybody else in the world. But I guess, you know what? Hey, you can't blame him. Right. Hey, he knows how the system works, and he's going to be one of the big winners. Speaking of big winners, gold and silver have been big winners. Matter of fact, gold's been the big winner for all of the 2000s, believe it or not. Our toll-free number, 800-951-0592. The website at allamericangold.com. And yesterday we had Jay Powell come out. Boy, he got a little testy. First of all, he cut rates, just like we thought, by the 25 basis points. I think that was, that was expected. Right? No shocker there. The 10-year note, in the 4.3s, so it's not really cooperating. But two things of note in what they had to say. Number one, it appears they're going to cut rates again in December, and then maybe take a pause in January. That's what it appears. Now, Jay Powell reiterated. Now, this meeting, don't ask me why. Who knows what they do. But apparently this meeting, they don't put dots on a chart. So we don't know this meeting how many more rate cuts, but he kind of led into they still believe that they're going to have a Fed funds rate somewhere in the 3% range. So that still would mean if they cut in December, Jason, they kind of hinted at maybe, don't be surprised if they cut 4 more times in 2025. So that was the first, and listen, that was the plan going in, right? So I think what you're seeing right now is, hey, Wall Street's all happy because, right, the Fed is going to try to make things easier. They talked about the labor markets no longer, being stressed. They don't want the labor markets to get any weaker from here. But, Jason, that was the first thing they said was, by the way, yeah, we're still on that path. And essentially, well, we don't do the dot thing, so you're going to have to wait till the next meeting. And then they got asked, well, Jay Powell got asked if he would step aside. So Jay Powell's term runs through 2026. So a couple of years of Trump's presidency. If he would step down, and he was like, no. If Donald Trump asked him, I will not step down. They asked if it was possible to be fired or if anybody from the Fed could be fired by President Trump. And he reiterated that is against the law, and I'm not going anywhere. So Jay Powell kind of saying, hey, if Trump wants to get rid of me, I'm not going anywhere. And, oh, by the way, legally, Jason, Trump can't fire him either.
Yeah, I heard that one of the things that might happen with the lame duck months coming up is that they might load a lot of government agencies full of a whole bunch of guys that are hard to get rid of, to slow down Trump's whatever he's going to do, and political games. So there might be more than just this one position. Or you might see this throughout the government. Right.
There's a lot of positions, as we talk about, that, hey, this is the guy you got, and once they've got that title, well, it's hard to fire people, and it's really hard to get fired from the government. I mean, you've got to go full-blown P. Diddy or full-blown Bernie Madoff if you're going to get fired from some of these government places. So that was very interesting. He also, here's the funny part. They talked a lot about the bond market. When we get back, I'm going to share with you what Jay Powell had to say about the bond market. And then also they asked, hey, is all this government debt starting to cause a problem? And you know what? I'll say this. You may be shocked by his answer. I wasn't shocked. I wasn't shocked at all because let's face it, the Federal Reserve has been enabling all of this debt for a very long time. How do I know? Remember Janet Yellen? Go big! Load up on the debt. It's free money. It ain't free anymore. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Joe and Jason. Patriot Radio News Hour, wrapping up this Friday. We said all along, we've been saying, listen, I think stocks would hit a new all-time high. Going back a couple of months ago, before the end of the year, I think this will be the highs. We'll see. Jay Powell, he's definitely committed to, I guess, easing monetary policy if he can. That's the thing. Can he? We'll see. We're going to find out. What will the bond market say? But a quick look at the markets right now. The Dow's up 300 points. They're very happy with Jay Powell. And, of course, the Trump win. Let's call it what it is, right? The Dow at 44,030. The S&P, remember I was talking about 6,000 S&P, 59.95. So close enough. I'm giving it the close enough. They've gotten as high as 59, 96, 87. We'll call it 6,000. Let's call it 6,000. So they've got the Nasdaq's down a little bit today, but doesn't really matter. Between NVIDIA and Tesla, they've raked in a small fortune this week. The 10-year note, 430. So kind of right where they started the week. It's been as high, right? Now remember, it got all the way up to 448? A little bit of a sell-off here. The problem is it really hasn't gone down, and I have a feeling we're going to see it go back up here. Crude oil off $2, right? Because Trump's going to end the war. We'll see. We'll see. Right now, gold is down. Well, here's the funny part. Gold's kind of right where it was. So gold shot up back above 20. Matter of fact, got the $2,710 with the announcement out of Jay Powell yesterday. Right now, gold 2,800 or 2008. I'm getting ahead of myself. 2,687. Silver, same thing. Silver got the $32. Kind of right back down to where it was here, $31.40. I'm going to tell you right now, be smart here. Be very smart here. Understand what's really happening. I get it. A little euphoria, right? Hey, the Fed's going to keep cutting rates. Yay! Donald Trump won. We didn't have the indecision, right? Think about it, right? Like Arizona and Nevada still haven't called the election yet, right? With craziness. But it's decided. It's over. It's a landslide. I think that was remember what we said? This would be the best case scenario. But understand what the bond market, what the central banks, what everybody has been warning about. Get more diversified. And this is where, a lot of times they suck you in. Oh, look, all time I write 44,000, 6,000. It's going to 100. It's going to 10,000. It's not. It's not. Be more diversified than you've ever been. And especially those that you guys are a little older, you're close to retirement, maybe you're at retirement, maybe you've got IRAs from 3 jobs ago, whatever it may be. Get your gold and silver put away. Check out our friends at YRefi. You can do all of those things penalty-free, by the way, just so you know. No penalties. It's just some paperwork, some trustee to trustee paperwork. There's no attack on your principal or paying taxes or penalties. None of that happens. All that happens is you get diversified. That's all that happens. We keep talking about our friends over at YRefi because I'm not worried about 2024. I'm worried about what happens in 2025, in 2026, in 2027, right? All of the things that we already know are coming. The tidal wave of debt. Here's the problem. We're not even at the apex. Think about this it's like a big wave coming in. The wave, it builds and builds and builds, and then it crashes. We're still building. We're not even at the apex of the debt that's coming. YRefi? Why do we like them? Well, first of all, you can get up to 10.25% fixed rate of return. Okay, that's pretty good, right? That's really good. Now, listen, if all as you owned was NVIDIA and Tesla, right? Great, right? That's great. But that's not how these investments work. You know that. I know that. You're sitting there looking at you're up, but maybe you're only up 15%. When it comes crashing down, it always works the opposite when it goes down too, doesn't it? Right? If it goes down 50%, why are you down 70? That's always how it works. Don't let it happen. Don't be that guy. Fixed rate of return just means it doesn't change. What if this and what if that? You take all of that out. You can use it as income. Right? So some of you may be like, hey, you know what? I just retired. I got a big bunch of money. I know what my Social Security check's going to be. And, hey, you know what? I'm going to put enough into YRefi where I can get an extra $1,000 a month or $1,500 a month, whatever it may be. You can compound it. They don't charge fees. There's no penalty if you need your money back. No investments do that. You know that. Check them out. Invest. Do more than check them out. Get involved. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YRefi24. 888-973-3924. So, Jason, yesterday, Jay Powell cuts rates. Gets a little tense about if Donald Trump wanted to replace him. Here's the funny thing. I'm not sure why that came up. Because Donald Trump had the ability to get rid of Jay Powell. And instead said, oh, no, have another 4 years. Right? And then Joe Biden said, hey, have another 4 years. So I'm not sure, but it was brought up. But the real big talk was about the debt and the bond market. So people were grilling him. Hey, why are you cutting rates, and why is the bond market going the wrong direction? You keep cutting rates, the yields keep going higher. Are you concerned, Jay Powell? No, of course. Everybody knows that he is. But you know what his answer was? Well, things move. They move. We're not worried. 6 weeks ago it was 3.6. We're not worried about these movements. He didn't quite sell it because they kept after him. Is it possible that government debt and the overwhelming amount of debt is starting to affect your ability to control the bond market? Now, they didn't say it just like that, but that was the gist of the question. His answer was, and I'm going to say this, I don't want to use a bad word, okay? I'm going to go with wussy, okay? Because all of us know we're not dumb. And this is the thing, I'm tired of them trying to treat us like we're stupid. We're not dumb. Of course, that's the problem. His answer, Jason? We don't get involved in government policy, and they shouldn't get involved in our policy, and we're just not going to comment on it.
Well, I mean,
that was his answer.
When you don't have a good answer, that's what you do. You plead the fifth, right? I don't want to answer that. So
I don't want to answer that. You know what? We don't get involved in politics.
Freedom of speech is also the freedom not to speak.
They asked him about the rally since Trump has been elected. Is that a factor in your decisions? No, we don't get involved in politics. We don't care about politics. We're not involved, and it's not. How can these not be factors?
Well,
right?
I mean,
what do you mean you don't factor them? You have to, don't you?
You know me, Joe. I think that they own both sides of politics. So,
well, of course. That's what I'm getting at. I'm trying to draw this up for our listeners. Don't be dumb here. I mean, right? Really? Like, where's Maury Povich? I say put him on Maury. Jay Powell, are you worried that the government debt is affecting your ability to control the bond market? Oh no, we don't concern ourselves with the government stuff. Right? That's a lie, right? Should Donald Trump's election of the presidency affect your decision-making process? Oh, no, we don't care who the president, right? That's a lie, right? The guy's up there lying to everyone. And here's the funny part. How do I know they're lying? Because all the reporters, they're asking follow-ups to the follow-ups, right? They're not, right? Well, I want to go back to that guy's question, right? Let me ask you, and all they do is, hey, I'm going to ask you the same question, but I'm going to move some words around and see if I can, trick you into giving us the actual truth. Now, he's too smart for that, but I think this is a huge factor when you're sitting there thinking about what should I do now? What should I do now? Stocks, all-time high, right? The guy for half the country, the guy they wanted won. Now what? Now what? And here's the thing. What's coming next is going to be, well, in the case of Trump, it's going to be less revenue because he wants to give out tax cuts, right? Inflation not going to go away. The bond market, I think the bond market's probably doing two things, Jason. I think, one, they know that inflation didn't go away. Two, they also know the deficits are getting bigger, and part of it's going to be because the bond yields themselves aren't going down, right? I mean, think about it. This is terrible when you really think about what's happening. And then today, the Food and Agriculture, they released their food price index. No, guess what? Up 2% month over month. And Jason, one of the biggest month over month jumps we've seen in a while. By the way,
2% or 0.2?
No, 2%.
2%. Okay.
Up 5.5% year over year. So when it comes to food, not a good situation. Cereal price index up almost a whole percent. Sugar, by the way, we got to stop eating this sugar. Up 2.6%. Dairy up 2%. The only thing that dropped, they said that the meat index dropped 0.3%, mainly due to lower pig meat prices. So apparently they said the price of pork went down a little bit. But overall, global food prices continuing to rise here, Jason. I know people hate the grocery. I now hate the grocery store. It was so funny. I'll tell them when we get back. CNBC or MSNBC, like they've lost their mind. Because Trump won. Let's see. Mexicans, or well, I should say, Latinos are racist, and black men, you're nothing but misogynist. 800-951-0592. Joe and Jason wrapping up this Friday. So apparently, the blame game and all that stuff, it's crazy what these people are saying out there. I hope it changes. But apparently, it wasn't the evil white man. No, it wasn't his fault. It was the Hispanics are racist. Yes, they don't like black people, according to them. And then Al Sharpton says black men are the most misogynist people he's ever met. Yes. No way they were going to vote for a woman. And I'm just sitting there laughing. I'm going, all right, can we all just agree? Right? And we all know this, right? Everyone's got some racism in them. They did. And, of course, let's face it. Why? Because, well, they want us to, right? They keep dividing us in all of these ways and all of this stuff. But here's what was really funny, though. So outside of because they've been on this whole campaign of white men are evil for the last at least 4 years. Now it's the Hispanics and the blacks. But Joe Scarborough was trying to say that he made up a story and got caught. And this tells you, I think, all you're probably going to need to know. He said that a woman came up to him at the grocery store and said, Kamala's not going to win because butter's $3. And as I told you guys know this, right? We're empty nesters. So, I don't know. I've gone to the store, right, more times in the last 2-3 years than I have in my whole life can probably combine, right? Like my wife will be, I'm going to the store. And I'm like, yeah, I'm coming. I'll push the cart around, And right as I'm asking my wife, hey, honey, how much is butter? One of the guests that he had on, this lady, she goes, she just blurts it out, $3? Just butter's $7. Right. And my wife goes to me, well, it's $8. But, and she goes, even if you get like the store brand and stuff, it's like $5.99. And he's trying to say $3. And my wife and I replayed it for her, and she started laughing. She goes, it hasn't been $3 in like 5 years. Yeah. This is how out of touch with reality people really are when they think about how much things really cost.
I got two things, because on the last segment you're talking, what should the listeners do, Joe? We should go back into that, I think. But number one and two. So you were talking to Jerome Powell. I'm wondering if this is just me. It's a little humorous, I guess, but it might be factual. Maybe Jerome Powell is irritated because the guy that's leaving is the guy that probably never calls him. That the guy that's asleep at the wheel, it doesn't bother him. Trump is hands-on, no matter if you like him or don't like him. I'm sure he's going to be bothering Jerome Powell on a weekly basis, or at least a monthly basis, right? Right? Jerome Powell had this nice, sweet deal where the president never bothered. I'll bet. Do you really believe Joe Biden even talked to the guy? I don't think he did, unless Joe Biden was instructed to call him. And number two, you say, well, with the stock market at record highs and Bitcoin at record highs and property prices out of control, gold at record highs. What should the average person be looking at or doing? Me, Joe, I think the prices of these things are going to go. I think the stock market goes up further. I think housing prices crest, but don't go down right away. I think Bitcoin goes to record highs. I think gold keeps going up. I think gold will go down a little bit at some point. I think the stock market's going to go down. All this stuff's going to crash or go down. Where do you want to put yourself when things start to crater? That's what I think you should be looking at. I don't know when the record high of the Dow is going to be, Joe. We can guess, right? The markets are telling us it's going to crash. But what if these things sometimes take time, and if the budget comes in March and they just spend, inflation makes it just blurs the reality of economics, doesn't it, Joe? It blurs the value of things. And so what you want to put your money in is where it's going to be dependable. Gold is dependable, and if inflation is going to roar, you better believe gold's going to roar.
It's going to be – it really is shocking, right, when you have GDP, the last two quarters, 3% and then 2.8%. And, of course, the way they kind of rig GDP so it's always higher in the second and third quarter, lower in the first and fourth. But still, we're going to have GDP growth, so let's call it the mid-twos, somewhere in the mid-twos. That's not 3.5, where you'd have to raise rates. It's certainly not anywhere in the realm of lowering rates, right? We have the unemployment rate at 4.1, and if you take out the COVID years, 4.1 historically is extremely low. Very rarely do you ever get below 3%. It almost never happens. See, they want to rewrite history on us, because this is what's happening with this Ponzi scheme now. 20 years ago, if you would have said we just had consecutive quarters of 3% and 2.8, the unemployment rate was 4.1, and really, if you think about it, the unemployment rate fell. Remember, it got up to that 4.3 that 1 month, and now it's down to 4.1. Now, granted, there was some funny math in there, but so what? That would have been talking about, Jason, they would not have been talking about rate cuts. They'd have been talking about rate hikes.
Yep.
And yesterday, Jay Powell essentially said, we're still on track for December. And by the way, I have no update for you other than the update I gave you the last Fed meeting that we expect to cut rates 4 times in 2025. He basically said right now that, we didn't do a dot plot this month, so, that's our forecast.
Yep.
Are you bothered by the bond market right now? I don't. No. It moves. It moves around. That was his answer. It moves around. It's never moved like this before. I've been doing this 20 years. The Fed has all but said we got another rate cut, so that'll be a full point of rate cuts. And you're telling me the 10-year note's going to be higher? You better believe there is something seriously broken in the system. We'll be back after the break. 800-951-0592. Yesterday we had $20 gold pieces, $28.95, 20 or more, $28.75. Guess what? Today, $28.75, 20 or more, $28.50 at 800-951-0592. And you can do that, Libs or Saints. You get to decide. You can mix them up if you want. Again, being able to buy close to spot here. And I was just looked in at that 10-year note, 4.32. Jason just not playing along here with these rate cuts. And it's something where obviously there's an issue. We've talked about liquidity, lack of liquidity, the fact that the Fed had or the Treasury had to sell another $125 billion worth of debt. The debt now $36 trillion. You know, no one's even talked about it, right? They still want everyone to believe it's still 34, right? Because there's 34 trillion to start the year. It's 36 trillion. And by inauguration day, 37 trillion. And then remember, Janet Yellen. Oh, well, starting in February, we got to increase auction sizes. And we still don't know what the plan will be for Trump, but they've had people out that are at least guys and gals that they think are going to be part of the cabinet. Or, hey, the Treasury's down to these couple of guys, and the economic advisors down to these three people, and they're all saying the same thing. Tax cuts and tariffs, Jason. Tax cuts and tariffs. There's a couple of guys talking about spending, but as far as decreasing spending, but the guys that are going to get the big titles, I don't see it, right? We hear Elon Musk talk about it. There's been talk of some Ron Paul stuff. But, Jason, they're talking about, well, maybe we can cut a few dollars. Maybe we can cut a few dollars. Let me lay out a few dollars for you, okay? Medicare, Medicaid, $1.8 trillion. Nobody is talking about touching Medicare or Medicaid. Now, remember, I've already told you this little secret, guys. 2026, they go broke. Just keep that in mind. Social Security. Now, I'm going to round down at $1.8 trillion, by the way. I'm running down. Social Security, $1.5 trillion. Okay. Interest on the debt. Now, right now, this year is $1 trillion. But next year, I'm going to split it. Because Bank of America says 1.6. I'm going to go 1.3. Military. Rounding up a little bit here. $1 trillion. That's $5.6 trillion. Now, unfortunately, next year, Medicare and Social Security will also cost a little more. We'll probably be closer to about $5.8 trillion. The budget, well, you can do math, right? You can do math, has been in the $7 trillion range. So, Jason, we're only got a little, not even $1.5 trillion of everything else. So if you cut, let's go crazy, because I think it's going to be closer to 7.2 trillion. You got $1.5 trillion of everything else. $1.5 trillion. You cut 10%. It's only $150 billion. That's it. And by the way, they're not going to cut 10%. Right? Heck, they're not even going to cut 5%.
It's just about the wording. If you cut from agency ABC, you get to go on the news and say we cut the budget. We cut the budget on A, B, C agencies. But if the money goes to Social Security to shore it up or some other agency, that's not a cut. But I think that's where we're headed. I think the efficiency department that's being created for Elon Musk, he's going to cut from some places and give it to someone else, which I'm sure will benefit him when it comes to subsidies. But that's where I think the cuts are coming from, Joe. They're going to talk about cuts. They're going to tell all of their voters, well, look, we cut from this place, and we cut from that place, and we cut from this place. But when it's a Ponzi scheme, you just need to keep increasing the spending. So they'll probably avoid talking about the actual spending, Joe. They'll probably won't talk about total spending. They'll talk about where they cut from. And then where are they going to add it? What, the military? Is the military going to get more? Who's going to get more? You create a whole new department. Well, isn't that more spending? By simply the efficiency department is going to have a budget.
They'll cut enough to be able to afford that one, right?
So that's where I think we're headed, Joe. It's all going to be. You got to be careful what the news is saying. The numbers can be manipulated and words are shifty, Joe.
I just want people to understand what I'm driving at here. We're fooling ourselves. If you're going to have any semblance of saving, and I don't know that we can, if you're not talking about cuts to Social Security and you're not talking about cuts to Medicare and Medicaid, if you're not talking about cuts to the military, it's not happening. Interest on the debt, there's nothing we can do. I guess I shouldn't say that. There are things we could do, and maybe we will. But if you're not talking about those four things, you're just wasting time. And like I said, you'll get a good headline. You'll get a good headline, and people are like, yeah! But it really won't affect anything. That's why you buy gold. I'm going to tell you right now, if they could actually affect it, I would tell you, sell. No, I'm telling you, buy. $20 gold, $28.75, 20 or more, $28.50. Final segment of the week coming up. 800-951-0592. Well, it begins. China says that they have a message for President-elect Donald Trump. There will be no winner in this trade war, nor will the world benefit from it. Increasing tariffs on Chinese products is going to significantly drive up the cost of imported goods and inflict more loss on American companies and consumers, and is going to backfire. China has taken steps to reduce its reliance on U.S. imports. And this is another thing with BRICS, right? So obviously, the U.S. more reliant on Chinese goods than the Chinese are reliant on U.S. goods, and that seemingly has been getting worse. But Jason, this is going to be interesting how all of this works out here, because the bond markets are kind of saying, "Hey guys, I don't know if you notice how much debt you got, and by the way, we already know it's going to be more." Right? It's not like the debt is trending down. Right? The debt keeps trending up. And this is the problem. The question really for 2025 is, okay, how close to $3 trillion are we going to get? That's the question. We don't know. Don't know.
How well is the short-term debt doing? How low is that borrowing?
Right.
I think that gets lower and cheaper.
Well, and it's really what we've seen is, that's a great question. The short-term debt has kind of stayed right where it's at. Right in, 4%-ish, low 4%. What we've seen is a huge increase in the long-term debt, right? The 10-year note went from 4.36 to 4.35, and yet the Fed has cut 75 basis points, right? Same thing, the 30-year note, right? Jason brings up a great point. If we start seeing now we're here, do we start seeing short-term rates go higher as well? Right? If the 10-year note gets to 4.6, is the 2-year note going to be 4.3, 4.4? We're going to have to watch all those things. I think it probably will. Now, we could get steeper, right? The 10-year, I think the shorter-term trade, they're going to rise. But I think we got still more steepening in this curve, and that is a dangerous thing. The steeper it gets, the harder the crash. $20 gold pieces, libs or saints, you pick them. 1 through 19, 28.75, 20 or more, 28.50. I mean, you got gold pretty much $2,700. How about this? 5-ounce silver bars, save $5. $175 for you guys at the lower end. You want to put some silver away. 5-ounce silver bars at $175. And Jason, we'll see. We'll have to see how all of this plays out. I think over the next couple, 2, 3, 4 weeks, we'll kind of get an idea of what the Trump cabinet's going to look like. And then, of course, I'm hoping that he's going to kind of let us know, hey, day one in office, I'm going to executive order this and executive order that. And then let's see if we can get some tax cuts passed. That's kind of what I'm thinking. 800-951-0592. Jason and I, we're going to wrap up the week with the half-empty cup right after this.